For the Young at Heart is sponsored by Duville Life and Wellness Community, a commitment to care, a legacy of compassion. This is Duville.
Hello, welcome to Father Young at Heart. I'm Lucille Jerome, and on today's program we're going to be taking a look at reverse mortgages. My guest is Howard King, the reverse mortgage specialist at Eastern Bank. Thank you for coming, Howard
Hi,
King.
Lucille. Yes.
You said I could call you Howie?
Please call me Howard,
Thank
Lucille.
you.
Thank you for having me today.
Thank you. We've been wanting to do this program for quite some time. Explain to us, what is a reverse mortgage? How did it even come into being?
Sure. Well, back in the 80s, Lucille, there was a reverse mortgage program that allowed homeowners to borrow a percentage of the equity of the house, allowed them to stay in the house for the rest of their lives. But in fact, what happened was the bank at that time took ownership of the house. And that wasn't a very good program at that time. So the AARP put together a program that they introduced to the FHA, the federal government, and if the government liked the program so much, they offered that they would insure and regulate and back the program, and that's the program we have today.
Right.
So that's, a lot of people have the misconception now, Lucille, that the bank takes ownership of the house with a
Yes.
reverse mortgage. You probably heard
Yes,
that.
I have.
I hear that every day.
Yes.
And it's because of it. In fact, in the 80s, that was the program that
right.
was available for a lot of homeowners.
Okay. But that does not exist anymore, and
Abs-
when did this change occur?
Probably in the late 80s, in the
Okay.
late 80s, early 90s. And there weren't a lot of people doing reverse mortgages at the time, but the changes occurred and the program became a lot more efficient and a lot more effective for many homeowners. Because let's face it, who wants to give up
Right.
ownership of their home?
Really, people don't want to leave their homes. We hear that all the time. You probably do also.
Right, exactly.
But these misconceptions still seem to be out there.
It is. I hear it all the time. And once I explain to people what a reverse mortgage is,
Okay.
they start getting a lot more comfortable. Because what a reverse mortgage is simply a home equity loan.
That's really all it is.
In a short sentence,
basically.
it's a home equity loan. I mean, you're basically using your home as
Right.
collateral to
Okay.
borrow money. So how it works is a homeowner is 62 and older,
Yeah.
and they have to reside in the house as their primary residence, and they get approved for a percentage of the equity of the home. And that number, that percentage, is based on their age and current interest rate. So the older you are, the more you qualify for. So a
Okay.
62-year-old, Lucille, won't get as much qualification percentage-wise as, say, an 80-year-old,
All right.
because they have a longer life expectancy.
Okay.
So what happens is they get approved for a percentage of the equity of the house. They're allowed to take the money a few ways. So they could take so much up front. So any mortgage, any liens on the property, any home equities would have to be paid off with the reverse mortgage if
Okay.
the homeowner has any.
So you're
And-
starting off clean, in other words.
Exactly. So you're
Okay.
eliminating those payments right away. Exactly. So the starting off clean, and if they best case scenario, someone doesn't have any liens on the property, so they get the availability to all they have available from the reverse
Okay.
mortgage, and with that other money, they can take so much up front, perhaps to do any home improvements, if any money they might need right away. They could leave money in a line of credit just to be used like a traditional home equity line of credit
right.
almost, where you just take money as you need it. Or you could actually opt to take so much per month that would be guaranteed for the rest of your life.
Now, why would these different options, so different people will have different options available to them, and are some options better for certain people or age groups?
Exactly.
Or widows versus a couple?
Exactly, Lucille.
Okay.
So I have some people coming in to me to say, they may say, well, I'm fine. I'm fine month to month. My monthly, I can make all my bills. I don't need, I don't need any more money, but I don't have a lot of money in the bank. I need a new roof. I need a new car. I want to go on a trip. That person may opt just to take a reverse mortgage. They take so much up front, they leave money in a line of credit, and then they're taking money as they need it. Another client may be somebody who is a widow maybe, and she, a widower, she receives, $1,200 a month in Social Security, and it's just not cutting it for them. So that person may opt to take so much per month that would be guaranteed for the rest of their lives. And the nice part is that it's not taxable. And none of the money is income taxable, I should say.
Okay, how is that possible?
Well,
everybody wants us to be taxed.
Right, well, exactly.
Sorry.
How do you get away without paying your income taxes? Basically, Lucille, it's taking proceeds of a mortgage. So just like somebody would take out a home equity loan and take money, or somebody would do a cash out refinance on their mortgage and take cash out. It's the same idea where it's not a taxable event.
Okay. So for some people, a reverse mortgage would be better versus going straight to a home equity loan?
For some people, yes. Now, when we talk about the differences between a home equity loan or a reverse mortgage, the reverse mortgage has no monthly payment. So that is one big benefit of the reverse mortgage. There are no monthly payments. Also, there are some, recently the FHA imposed some credit and income qualifications. But so in the old days, before last month, well, before April, whatever the day was, 28th, I would have said that a reverse mortgage has no credit income qualifications. And now I say there is some limited credit income qualifications, but it's a lot less stringent than a home equity or a mortgage. So some of my clients, in fact, may have not qualified for a home equity or a mortgage, and now they can take a reverse mortgage. That's some of my client base right now. So yeah, so like I said, there are no monthly payments, but when most people, when does the note come? When do I pay?
When does it come due?
Too good to be true, right? What do I never have to pay this back? Well, you don't get something for nothing, right? Well, I don't remember the last time I got something for nothing. So basically, there are 4 events that would trigger a payback on the reverse mortgage. Now, when we talk about what's going to be paid back, it's simply principal that the borrower, the homeowner actually borrowed. So whatever, if they've taken a monthly payment, that money becomes principal. As they take money, that becomes principal and money that's owed on the reverse mortgage. Plus what happens is interest, rather than making interest payments every month, interest is accruing on what you borrow. Okay? So over time, interest is going to accrue, the amount you're going to borrow is going to increase, and it's going to get paid back without penalty. There are no prepayment penalties, no early termination fees for any reason. So if the homeowner sold the house, they simply pay back what they owe on the reverse mortgage, principal that they borrowed, plus interest that accrued, and then they keep the difference.
They may have used less than what they borrowed. In a
Hopefully,
way?
yeah, a lot of times, yeah, they use, so they may have just left money in a line of credit, and maybe the home value increased. So they could, in fact, typically be equity left over if they did sell the house over time. If the borrower failed to pay their real estate taxes and homeowners insurance, just like any other mortgage or equity, if you would take out a home equity anywhere or a mortgage anywhere and did not, in a reverse mortgage, is no different. If you fail to pay your real estate tax and homeowner insurance, the bank will foreclose. Yeah, absolutely, and that's for any lien, any loan you take against, pretty much any loan, I should say, you take against the house. And I mentioned earlier that the home has to be, you have to reside in the house as your primary residence. You do have to continue to do that for the duration of the loan. So if somebody decided they were going to move to Florida and Florida was their new primary residence, then the home is a second home that has a reverse mortgage on it. The note actually comes due at that point. It comes
due at that time.
That's right, exactly.
Suppose someone, things happen. I mean, you know this, things happen. Suppose the elder falls, breaks a hip, ends
Yes.
up in the hospital, ends up in the nursing home, and for whatever reason is not going
Rehab.
to be able to go home safely again.
Yeah.
What happens then to the house?
That's a great question. So you have, so what happens, so if the homeowner is in a facility and they've been there 12 consecutive months and they haven't gone home yet, and the facility has become their primary residence, and the home they're truly not going back to the house, then the note comes due and they would be required to sell the house.
Okay.
Or somehow pay off the reverse
Sure,
mortgage.
sure.
If they, that, it's definitely one issue that that happens. But if somebody, like you said, if they just break a hip and they can do improvements on the home, that they can safely
Sure.
move back to the house.
Right, because
And-
sometimes they can. Sometimes it's just you go to rehab and then you go home.
Absolutely.
Okay, and the rehab staff will tell you what needs to be done in the home.
Absolutely,
Okay.
absolutely,
All
that's
right.
right.
Okay.
And if that's the case, then and the home is going to be their primary residence
Right.
still, then they'll be fine. There's
Okay.
not going to be any issues moving
Okay.
back to the house after that. So, yeah, so the fourth event that the note comes due
Okay.
is if the borrower passes away. Then that day comes. The house goes down to the arrears, because as I mentioned before, they do own the house.
Right.
So the house is going to go down to the
Okay.
arrears. And then the heirs have 6 months to pay off what's owed on the reverse mortgage. So they could either sell the house. Typically what happens is they sell the house, they pay off what's owed on the reverse mortgage, and they keep the difference.
Okay.
If they want to keep the house, they can obtain traditional mortgage financing, pay off the reverse mortgage, and keep the house.
What if the house is co-owned by, say, a widow, a widower, and one of their adult children? Because sometimes people think that's a good idea to do.
Sure.
In that kind of a situation, well, maybe there's no difference at all.
No, that's a great question. If you remember what I mentioned earlier, that the basic qualification of reverse mortgage is that you're 62 and older and you live in the house.
And you live in the house.
So if the adult child didn't live in the house and wasn't 62 and older, then that
Okay.
house wouldn't even qualify for a reverse mortgage in the first place.
Okay.
Okay, that's a
All right
great
then.
question.
Okay.
Yeah, absolutely.
Okay. But if he lived in the house, he or she lived in the house
Ian was
with
over
his mother and
62.
father and was over 60. 62 is the magic number.
That's right. Yeah,
Okay,
exactly.
okay,
Exactly.
okay.
So if they were, yeah, then they'd qualify. Just like a husband and wife.
Sure.
If they're both 62 and older, they live in the house, and God forbid one of them passes away, the other one is still going to get full benefit of the reverse mortgage. They won't be forced to pay back anything. They're not going to lose any qualifications that they've gotten from the reverse mortgage.
So in your position, from what you see and hear on your daily basis doing your job, you hear a lot of stories. And
Absolutely.
the fear about not being able to keep their own home is what I hear a lot about.
Yes.
So you're in a position to help put their mind at ease.
Absolutely. A lot of my clients come to me and they've already talked to a realtor about possibly selling their house. They've been
Right.
looking out at condos or at apartments and a smaller house. But and they're looking at all their options. And to that, and absolutely looking at all the options is the best thing to
Right,
do,
right,
because I wouldn't
right.
recommend anybody get into a situation that they don't want to be in.
Yeah.
So a lot of times, if somebody truly wants to stay in the house, and the reason they're even considering selling is financial,
Right.
then the reverse mortgage could be a great option.
Okay.
I mean, other people I talk to say, well, I'm looking at the reverse mortgage, but the house is just too big. I can't maintain the lawn. I can't shovel the
It
snow
needs a
anymore.
lot of work.
It needs exactly.
Yeah.
Say, I just, I was thinking about the reverse mortgage, but I just can't stay in the house anymore. I need to downsize. And then a reverse mortgage
Right,
obviously is
right,
not for that
right,
person.
right.
Sell the house, find something you're comfortable in. But I've talked to a lot of people who have sold their homes and downsized to a condo. And people think a condo is going to be a great financial solution, but if you have a $30,000 house and you're buying a $270,000 condo, you still have taxes, you have condo
Yes,
fees.
yes.
It's not helping you financially typically. It's helping you with the ground, it's less maintenance.
Exactly.
So it's helping you in some ways, but 50% of the people I talk to are thrilled that they did it. 50% of the people I talk to wish they had explored other options, because once you sell your home,
That's it.
and most of my clients have been in their homes 30, 40 years.
Right, right.
And it's a
right.
hard thing to do. Their
It's an
kids grew up there.
attachment. It's a
Absolutely.
home. It's not a house. It's a home.
Exactly.
Okay?
The kids grew up there.
That's right.
It's heartbreaking sometimes to see. Because some people I talk to, the reverse mortgage isn't enough money. I've talked to people who need, I need
Okay.
$2,000 a month to stay in the home. And the reverse mortgage might only get them $1,200 a month.
Okay.
And in that case, and it breaks my heart to tell them that the reverse mortgage financially alone isn't going to get you what you need
not
to
gonna
be
get
able to
you.
sustain your real estate taxes. Because like I said, the last thing I would ever do is put somebody in a reverse mortgage if they can't pay their real estate taxes over time,
Right.
because then they're going to lose the house
That's
anyway.
right. That's right. The a lot of ins and
We're
outs
talking a
here.
lot, I know.
A lot of ins and outs. And no wonder sometimes people get confused. Not me, of
Absolutely.
course.
No, of course not.
But I can see why it can be overwhelming for some people when they're in a position to have to make these decisions.
Right, well, it's a big
right?
decision.
It is a
Yeah,
big decision.
Yeah, nothing to be taken lightly.
Right, right.
And that's why, yeah, absolutely. When I sit down with somebody, I like to go over exactly what they're doing,
Right.
make sure it is a good option. And, it's hard when you get into the wrong person and they're high pressure trying to sell you on a reverse mortgage, because
Right,
that's not
right.
how you get into a reverse mortgage.
Sometimes people think the house is too big, and some of the older homes are big, and there's a lot of land, and maybe they want to downsize, or maybe go into
Absolutely.
an over 55 development. Some of those are almost as expensive as some of the homes, and the space for some of them, maybe they're all on one floor, but the space might be a little bit too big for what the older people want or need.
Absolutely. Yeah.
So again, there's that other decision. So they come to someone like you and they say, okay, this is my home. I would like to stay here if possible.
Yeah.
Can you help me?
Right.
Can you
And
help
I
me?
can help.
Yeah.
And what I do is make sure financially.
Right.
And well, I'm not saying I make sure financially. I give them all the tools they need
Right, right.
to make a proper decision.
Right.
I like to think, anyway, they're making the right decision.
Well, they might be making the right decision based on what they know at the time.
Right.
But who knows
Well,
if at some point in
yeah.
time,
I mean,
that's
3 or
for
4
anybody.
years out. Yeah,
you know?
anything's going to
Sure,
be a crapshoot
sure. I
a
mean,
little
we don't
bit.
know tomorrow.
Right,
None of
well,
us really knows
exactly,
tomorrow.
exactly.
But I do have a friend I told you about who has a very big house.
Yes.
And we'll see what she decides to
But
do.
if she wants to stay in the
You
house,
know.
and if she needs the home repairs
Yeah.
complete,
Yeah.
and she doesn't have the money otherwise to do it,
Yeah.
and she doesn't want to take on the burden of a monthly payment, a reverse mortgage could be a great option.
And the other thing, too, some people who are used to their home and roaming around in different rooms, even if it's too big, an apartment or condo might seem too cramped for them if they're used to a bigger
yeah.
place.
Right, well,
right?
the neighbors, I hear I hear that a lot. It's a little smaller than I'm used to, and I hear the neighbors
Yeah,
too. Oh, I'm not
yeah,
used to this
yeah.
neighbor upstairs and
Yeah.
having a neighbor next to me.
Right,
I've been in my
exactly,
home for
you
50
know?
years. And
So it's knowing someone's psychology, too, in a way, isn't it?
yeah, a
In a
little
way,
bit. A little bit, sure.
You know?
Sure, absolutely.
What's going to make a person tick,
Yeah.
in other words. In other
Right.
words. Okay.
Yeah.
Now, some of these ads that we see on TV, because I see some of them.
Yeah.
I see Henry Winkler. Who's the other one? Bob Wagner's one of them.
yeah, Fred
Fred
Thompson.
Thompson's another one. They're very distinguished-looking senior citizens. I mean, I remember them when they were younger,
Yeah, yeah.
as I was.
Yeah.
And they make it sound very easy, very simple, no
Yeah.
problems, no risks.
Yeah.
But you're saying that's really not.
Well, I like to think it's simple. That's what I do for work, so
That's
it's
what
simple.
you
But,
do,
but
right.
yeah, I mean, the ads on TV, they are very reputable. I know
They
all the
are.
companies, they're reputable companies.
Yes.
That you have to be to do a reverse mortgage because it's an FHA mortgage. You have to be licensed through the FHA. They're trying to get paint you the best picture
best
possible to get
picture.
you to call.
There you go.
Those ads are very expensive.
Okay,
So they
yeah,
need you to
yeah.
call. They'll send you nice brochures, and somebody from California typically will give you a call. Well, half my clients have called somebody, and they get somebody in California, and they'd rather
wow.
deal with somebody locally.
I was just going to ask about that because do these stars represent any companies who are local or any banks who might be local?
Not really
Not
local,
really,
no.
okay.
They may have some local presence in some
Yeah.
capacity, perhaps. I don't really want to speak to
I
that
know,
because I'm not
I know.
100% sure.
Okay.
But from what I've heard, typically my clients have said, well, they're in California. I don't want to deal with somebody in California. I don't want to do it over the phone. I don't want to do it by mail. I'd rather deal with somebody locally.
Yeah.
Because what you got to remember, we're talking about what's called a HECM reverse mortgage. Stands for Home Equity Conversion Mortgage. Yeah,
Say
I don't know
that,
whether you've
HECM?
heard the
No, I
acronym
haven't.
HECM.
HECM.
HECM, H-E-C-M,
Okay.
Home Equity Conversion
Okay.
Mortgage. And that's the federal government program.
Okay.
Okay, so there are some differences going company to company, some minor differences. You could, we at Eastern Bank do charge, that I know of, the lowest interest rate possibly. Some people could charge a little bit higher interest rate, so there could be some minor differences. Everyone's going to get the same. If you remember, I talked about a homeowner approving for a percentage
Yes,
of the
yeah,
equity of the house.
right.
They're going to get the same percentage, whether they go with me, whether they go with
Okay.
Robert Wagner, Fred Thompson. You're going to get the same percentage. And you're going to, because it is, like I said, an FHA program through the
Right.
federal government. And the important thing about that, the FHA, we didn't really talk about the FHA guarantee.
Right, we didn't.
And I know, yeah.
We still
so-
have some time, though. That sounds like it's very important for us
It's-
to get into.
Right, exactly, exactly. So what the FHA does is they guarantee, they insure and regulate the loan. They guarantee that the homeowner will never owe more than the value of the home. So let's say somebody has a $300,000 home and they approve for $200,000, okay? I don't know how old somebody would have to be, probably in their 70s, to approve for that kind of.
Sure.
But anyway, so let's say they receive $200,000. The home is worth $300,000. They live in the home a number of years. Interest accrues
Right.
on that money, and home values decline. And they find themselves in a position where they owe more than the value of the house.
Okay.
Okay, the FHA guarantees that they'll never be forced to sell the house, never be forced to they'll never lose any benefit they're getting from the reverse mortgage. So if they're getting monthly payment money, if they have a line of credit money, they're always going to get that money. Regardless, they're always going to get that money, not only regardless of what happens with home values, but regardless of whatever happens to the institution holding their note. So if somebody's holding their loan, they go
Right.
bankrupt, the federal government will guarantee
Okay.
the homeowner whatever money they're receiving. And the other guarantee, basically the liability to the homeowner or their heirs is capped at the value of their house. So let's take that a step back. So somebody has a $300,000 house, they borrow $200,000. Interest accrues on that $200,000, home values decline. The borrower lives 20 years, let's say, and the house goes down to their heirs, and they pass away. House goes down to their heirs, and their heirs are in a position where they have a $300,000 note on a $270,000 home.
Okay.
They wouldn't be responsible for any difference. That
All right,
$30,000 will be satisfied by the FHA, the federal government.
Okay.
A lot of my borrowers worry, well, I don't want to leave a bill for my
Yeah,
kids.
yeah.
And, the kids are established, they're not worried about their inheritance. And
sure.
hopefully, in a perfect world, hopefully the home values increase. Hopefully there's something left over
Right,
typically.
right.
But, you don't know. But rest assured that you're not going to, that your child or your heir isn't going to have to pay back any money that's owed on the reverse mortgage, regardless of how the rest of the
Regardless.
state looks. Whether it's life insurance, whether there's $100,000 in the bank, it doesn't matter how the rest of the estate looks. The homeowner's heirs are never going to have to come out of pocket with any money to pay off the reverse mortgage, and that's an important concept.
That is a very important concept. It's peace of mind. There are several built-in pieces here to ensure some peace of mind.
Right, well, exactly,
Okay,
exactly.
and I think for senior citizens, older, whatever you want to call us now, I mean, some people call us senior citizens or older adults, whatever, the peace of mind in wanting to leave something to your family.
Right,
And
exactly.
trying to stay in your own home. I mean, those are the three things
Yeah,
that
you're
are
playing,
happening.
you know, it's
you're
a tough
playing,
thing sometimes,
you know?
especially now with the
Yeah.
cost of everything
I
going up.
know, I
You
know.
can't do everything
Right,
sometimes,
I know.
you know?
But there you are at your bank offering some hope for
Yeah,
some people.
I like to think so.
Yes.
I like to
yeah,
think
well,
so.
it sounds like you do. Sounds like you do. But let's see, I want to make sure I cover some of the questions here. So
Sure.
proceeds are generally going to be tax-free?
That tax-free, yeah,
Okay.
absolutely. Yeah.
Okay.
Income
All right,
tax-free.
okay.
Still have to pay your real estate taxes.
Okay, you still have to do that, of course. This doesn't impact anything on your Social Security or Medicare or
Right,
anything
it
like
shouldn't.
that?
It shouldn't impact your Social Security, it shouldn't impact Medicare. It may impact some other government benefits you receive. If you're taking them, let me give an example. So
Yeah.
if, let's say somebody was getting food stamps, for example, I believe, I don't know exactly what it takes to approve, but let's say financially they approve for food stamps.
Okay.
And they're getting $500 a month from the reverse mortgage. That $500 a month is not part of income that would go towards
Okay.
those qualifications.
Okay,
Okay?
that's very important.
It is. Now,
Very important.
here's the issue. If you're not using that 500 and it's building up in your savings
Mm-hmm.
account, and all of a sudden you go over, I think it's a $2,000
There's
threshold.
a limit, yes.
Then they ask for a bank statement, and they see $2,000 in the bank.
Right.
That may disqualify you.
Yes.
But line of credit money, if you have $100,000 sitting in a line of credit, that's not a deposit account.
Okay.
So that wouldn't be. That wouldn't have to be reported for the sake of, say, food stamps or
Right,
heating assistance.
Right.
Some of these other government benefits. So then it generally has no impact on Social
Good,
Security.
good. That's important for people to know.
Right. Oh,
It really
absolutely.
is.
Absolutely.
There's a lot of details. But sometimes the devil's in the details, but that piece of information I think is very important. Actually, the FHA information was very important, too.
Right. Oh, yeah, absolutely.
my,
That's
you
an
know?
important concept.
Yeah. We're going to be winding down shortly, believe it or not.
Oh, is that right? Already?
Oh,
Wow.
shortly. Oh, yeah, I know.
Time flies
I know.
by, huh?
It does. It does. So, in summary, from your perspective, what do you think you want to make sure our audience understands?
Yeah, basically that a reverse mortgage, a lot of people have misconceptions about
Yes.
reverse mortgages, and I hate to hear, when I hear somebody say, well, my friend told me not to take a reverse mortgage, I say, well, does your friend know your financial situation?
Right.
Does your friend know that much about you to make such an important decision?
Right.
I recommend they give someone like me a call. I'd be happy to sit down with them at their home, a local Eastern Bank branch, and give them honest, accurate information, pressure-free.
Pressure-free?
Just give them information. Here's how much you qualify for. Is it a good option? You decide, is it a good option for you?
I like that summary. I like that summary a lot. And there's a little piece of information there. Sometimes those TV ads, if you get something in the mail, that's giving you information, which you can then look at your leisure,
Yeah.
and then go to a local bank if you don't want to deal with something in
Sure,
California.
yeah, a lot of my clients do
right?
that, absolutely.
So you get the information from wherever you can find it.
Yeah, absolutely.
Okay.
Yeah, all the
I want to
information you can
thank
get.
you. I want to thank you so much for
been a
coming
pleasure.
today
It's
and
been a
answering
great
our
time.
questions.
Yeah.
And we've covered a lot of territory.
I think we did,
You know,
yeah.
the devil's. A friend of mine once said, you know, the big print giveth, the small print taketh.
That's
But
right.
it sounds like yours is all in the big print.
That's right.
I like that. I like
Absolutely.
that. And thank you so much.
My pleasure. It's
Thank
good
you. You
being
know,
here.
I learned a lot today.
I'm glad.
I learned a lot today.
Yeah, it's been
you
an
know?
enjoyable experience.
Yeah,
I'm glad to
yeah.
get the information out.
I know. How often have you been doing anything like this in the past on
Never a
television
TV
or the
show.
radio?
No, not as much
No?
as I would like to, certainly.
You have a very nice way of presenting this information that could put people's mind at ease,
Yeah.
as far as I'm concerned.
Great, yeah,
Okay.
no, absolutely. I appreciate it.
Take care, everyone. Until the next time.